I'm Jay Taylor. I'm the editor of a newsletter called Jay Taylor's Gold, Energy, and Tech Stocks. Also the host of a radio show called Turning Hard Times into Good Times. This is a special recording for Turning Hard Times into Good Times. I'm with Darwin Green. He's the president and CEO. He's a director as well of HighGold Mining Inc. It's a company I've been following in my newsletter for the better part of a year now. They've got a very exciting project in Alaska, in southern Alaska, not that far from Anchorage, fairly moderate climate, that part of the state, the Cook Inlet, right along there in that area, with the 750,000 ounces of gold, equivalent ounces of gold, at 10.83 grams per ton, another 134,000 ounces of gold equivalent in the inferred category. So it's got a good start and a lot of really high grade gold and polymetallic mineralization. Very good story. I think the stock is trading only at about a third of its high last summer. I think it's people aren't really focused on what's going on. Part of it has to do, I think, with the idea that Alaska is a short season and not a lot of drill information. Although, given the fact that the labs were so far behind, we actually only in March received the last of the drill results from last year, and the company learned a tremendous amount about the geology of this project, which had been worked on only maybe 20 years ago or so. And so I think it's a very exciting story. I'm really wanting our listeners and my subscribers to pay attention to it now. The company's going to start drilling pretty soon with some fresh eyes on the geology. Lots of good upside and frankly, a lot of good results from last year that expands the footprint. So probably that's a very conservative reading, the 750,000 gold equivalent ounces now, and lots to look forward to as this drill season begins pretty soon. So I have Darwin with me, and I thank you very much, Darwin, for joining me today.
Well, thanks so much for having me, Jay. It's great to be here.
So you have this good start, 750,000 ounces, probably conservatively measured. You had a good drill season last year. You expanded the footprint very considerably. Talk to us a little bit about what you learned. Well, first of all, how much, how large did you expand the existing resource? You haven't calculated it yet, but give us an idea of the increase in footprint. And then maybe tell us a little bit about what you learned about the geology this year, because you learned a great deal, as I understand it. You have a different view of things than you did before you started last year.
Yeah, no, absolutely. Yeah, so I mean, it was a very successful year in terms of what we learned and in terms of the expansion of the deposit. And just talking about expansion, one of the conventions on the project when we acquired it is that the deposit was a bit of a what you see is what you get. There wasn't much room to grow it at depth. It was cut off by a fault, and all of the upside resided in that offset, fault displaced offset. And what we learned is that's not true. There's actually a lot of legs to keep expanding the deposit down plunge. And we've effectively doubled the footprint. I'm not saying we've doubled the size of the resource because we weren't drilling as many of the sort of 50 to 100 meter type intersections that you had right in the guts of the deposit. But it was a big breakthrough for us to be able to see that the deposit does extend sort of at depth or down plunge. We keep chasing it down in that direction. And we also started to see some other types of mineralization evolve. Both down plunge, we're seeing some more copper-rich mineralization. It's sort of some of the roots to the system. We think there's room to keep chasing that to depth, and we fully expect to have more gold-rich zones down there as well. And then one of the things we learned, one of the targets that was, I think, had a fairly high degree of anticipation or speculation last season was this fault displaced part of the deposit. And we had good reason to be drilling where we were. There was good quality work done by the past workers. It was old, but they did really good quality work. And they had a couple of holes that suggested they were right on the fringes of what would have been like our main deposit. So we went in there, we drilled a bunch of holes. They were deeper holes. We hit some mineralization, but it wasn't the offset of the deposit. In fact, it was a different style completely. It was what you call VMS mineralization. It was more zinc rich, but still pretty exciting and really changes, the overall complexion, I think, of the property as a whole by knowing that you have that new style of mineralization to chase in addition to the main deposit. But fundamentally, we learned we were still too far, I guess, west of where we needed to be drilling, and we were actually there was a second fault that came in there, and we needed to be further east. So that target is still alive and well. It will represent some portion of the deposit that we can keep chasing, while we have the main deposit itself still open to chase to depth.
So you also have picked up a lot of other targets as well. I think you have sort of vein targets, I think gold-rich vein targets at various places. You have a number of different targets that I think that you're planning to drill or look at this year. Can you talk a little bit about your exploration program going forward? Will it be to continue expanding the known resource, or are you looking for some new targets?
Yeah, well, it's pretty exciting this season because we get a bit of both. You know, it's nice to have a project where you have this sort of steady incremental expansion of your main deposit, you know, just building value with each step out. But you also have the opportunity to swing for the fences and make that brand new discovery. And that opportunity is very real here. This is a project that was initially, the first time it was ever worked was in the early 1980s. They identified a whole suite of prospects over the span of sort of distance of about 10 miles, you know, from valley to valley. They did the initial reconnaissance work to identify those prospects, and then they drilled the main discovery, and they never went back. And so they've sat there ever since. And so one of our mandates last season was to better understand the sort of regional picture, district scale opportunity that the property offers. And we were really pleased with what we developed. We identified brand new vein fields. There's a new vein field that's so far anyways, it's about 1 kilometer long by about 500 meters wide, a whole bunch of different veins. Part of that is very silver rich, actually. It's running sort of 100 grams to up to almost 2,000 grams per ton silver. You know, grab samples. This was early reconnaissance stuff. Just, hey, there's a vein, grab a sample, move to the next one, grab a sample. What's really neat about that area, that's called Difficult Creek, and it's maybe 3.5 miles to the northeast of the main deposit. And but as you get lower on that, that's all up on the ridges where we're seeing these new veins. As you get lower, there's a lot of gold, high-grade gold, 20 grams, 50 grams type stuff. And we see that on both sides of this big ridge. And so we believe there's a real opportunity here to both identify, a significant silver system, but we're particularly excited about chasing that deeper into the lower stratigraphy where we know we're seeing gold on either side. I think it's a good probability of tracks right underneath. And that's just one of 8 or 9 other prospects. There's probably 5 or 6 that are, we want to advance more immediately. But it definitely offers that opportunity for sort of brand new raw discovery, and it's fun. It's an exciting part of the business to do that real grassroots stuff and find brand new vein fields.
So you'll be drilling some of those new targets this year, do you think?
For sure. Our biggest challenge is figuring out how much goes to the regional prospects versus how much sticks on the step outs on the offset area. I think at a minimum, we'll see 1/3 of that drilling go to the regional, but we'll have those details out very soon. We have 3 drills that we left on site over winter. So, we're ready to go. We'll probably start with those 3 on the main deposit area. And then maybe after a few weeks or months, we'll start getting to those other prospects. Some of the other prospects are a little earlier stage. That Difficult Creek I was talking about, it's good to go now. We're ready to drill it. We're permitted. We're good to go. Some of the other, in fact, we're permitted to drill throughout the whole property area quite extensively. But other of the prospects are earlier stage, like, for example, Easy Creek. We just did reconnaissance soil lines 1.5 kilometers long. They're all anomalous. So it's clearly a big system there. It has a bit of copper in it too. It's quite interesting, but it needs a bit more work of mapping and prospecting to get it to the drill ready stage. We're flying airborne survey across the whole length of the property, particularly now that we found some massive sulfide or VMS style mineralization. That will be a good tool for looking for more of that. And we'll be doing IP. So it's going to be kind of lots of different aspects going on at the same time this season.
And you'll start about mid-May or so?
Yeah, we're opening up camp about then. There's a fair bit of snow up there right now, but it's melting fast. And we've got an airstrip and, a camp that should be fairly quick to get up and running. But we'll open up the camp, fly the airborne survey here the last bit of May, and I would expect to have the drills turning by the end of May or the first week of June, so somewhere in that range.
All right, I should ask you about, this is a polymetallic deposit, at least what you focused on so far. You know something about the metallurgy, and I think that's encouraging. You might mention that very quickly, and then I want to ask you about your Ontario project. But just for the little time we have left, could you comment on the metallurgy? Because I think that's a very important aspect of this project.
Absolutely, it is. It's really key whenever you have a polymetallic system. I mean, polymetallic systems, for starters, are nice. You have the gold, but you also have the different metals in there, the copper, the zinc, the silver, and it sort of makes for a naturally hedged deposit, because oftentimes one metal's up and one's down. Challenge with some polymetallic systems is, you know, how much of the metal are you actually going to recover?
Mm-hmm.
For this project, it had good metallurgical work done in the past. In fact, there was a gold producer, a mid-tier gold producer, that was looking to develop the deposit and direct ship the ore to another mine that they had to process it there. That was looked at in the early 90s. And the benefit of that is they did a lot of engineering and met work, and short story is it's very good. They're looking at sort of high 80s and into the 90s for all of the major commodities. It's a moderate grind size, and there's no nasties. You know, sometimes you get the toxic elements that can be problematic. Arsenic, mercury, it's clean. You know, and really what sets us apart, just for your listeners' benefit, there's one thing having a high-grade gold deposit. We've got a deposit that's in the upper 10% of undeveloped gold deposits in North America. But what really differentiates Johnson is we have that grade with incredible thickness. So most 10-gram systems are running, you know, maybe 2, 3, up to 4 meters wide on average. When you have narrower systems, your cost to mine are higher. The wider you go, the lower your cost. So we have that kind of grade at sort of an order of magnitude greater thickness, sort of 25, 30, 40 meters true width. And that makes for the ideal deposit. And so we've got, that's our starting point. Now we're looking to just grow that and get to critical size threshold.
All right, real quickly then, Crocius, your project in Ontario, very exciting. I mean, not too many people paid much attention to it so far. I think last year was the first time you started working on it, but you're quite excited about it. You expanded your land holdings there very dramatically this year, I believe. Just give us a quick overview of Crocius and why you're excited about it.
Yeah, well, for starters, we're in a part of the belt that hosts a lot of gold. I mean, we are in the epicenter of gold production for Canada, the Timmins Camp. And we're at the east end of the Timmins Camp. There's Manita Porcupine, who have an 8.5 million ounce endowment. There's Black Fox mine owned by McEwen Mining that's 2 or 3 million ounces. It's on one side of us. Mayfair, they're a new issuer. They have 2 million ounces at a gram immediately on the other side of us. So there's a lot of gold there. At the core of our property is a mine. It was a small scale mine, but produced some of, if not the highest grade gold that came out of Ontario. Gold in the percents, many samples in the Royal Ontario Museum. It's beautiful, beautiful stuff. So we know we've had that hosted on the property, but it's basically what we've done is we've expanded our land position about tenfold after doing about 10 different property deals. And the land that we acquired, most of it was staked back in the 19 teens and 30s and has had no work done on it since. It was a patchwork of different owners. It took us about 18 months to track all these guys down through estates to consolidate it. Most of them have old little pits and trenches and things, but there's been zero exploration, let alone modern exploration on these properties in the last, almost 80, 90 years. And you're in very, very permissive rocks. We've got the Pipestone Fault, we've got the Monroe Fault, we've got ultramafics, and at our core, we've got this project that's produced just unbelievably high-grade gold in the past. So we like it. It's still pretty raw in terms of exploration. So after consolidating that land, we've gone and done airborne and done a structural study. We're doing all of this targeting work so that we can hit it hard in the fall. As we start to wrap things up in Alaska, we'll be ready to drill in the fall.
All right, so I guess, how well funded are you?
Very well funded. We've got about 17 million cash on hand right now. We also have another 3 million of unexercised warrants that come due in September. They're in pretty good hands. We expect a good chunk of those to come down between now and then. So fully funded for everything we're going to do this year.
Wonderful. Excellent. All right, so we'll keep our eyes on the drill results coming out. I guess there's delays in labs these days, so it will be a little while yet, but you'll start drilling, start working at least mid-May or so. Darwin, I want to thank you very much. Anything else you'd like to add real quickly?
Not really. Just it's a real pleasure to have the chance to talk to you and your audience. We think it's one of the better stories out there, and we're very accessible in terms of Alaska. We're not remote at all.
Yeah, that's a good point. Well, I think so too. At about a third of the price of your high point last year, I think the stock looks very attractive from my personal point of view. And thank you very much, Darwin, for taking the time to talk to us today.
Wonderful. My pleasure, Jay. Take care.
Bet.